Good, brother.
Hi, welcome to Wise Beyond Bitcoin, your home for news, education, and opportunities in the crypto space. My name is Ryan.
And my name is Lucas.
And this is not financial advice. We are providing our analysis, our opinion, and what we've discovered on our own, doing our own research. So just take that with a grain of salt. This is an inaugural episode of our macro outlook series. We've touched a lot on macro issues over the last few months, and we will be trying to organize this into a systematic routine under this title of macro outlook. So look for future episodes. We will be focusing on the links between the macro issues with inflation, monetary policy, unemployment, and those issues, and how they relate to crypto markets and financial assets in general. So without further ado, we just wanted to start off on our YouTube channel. We have a new banner that is pretty slick, we think. So take a look at that. And there's some new videos that have been uploaded recently. One very cool video about a awesome NFT project on Secret called Clandestina. There's some good videos on how to create and use Kepler wallets and the IBC, staking and swapping and all the above, plus a lot of other really cool topics that we've covered and we will be covering in the future. So check out the videos section.
In fact, before you go, brother,
yeah.
I'll just give real quick, as this is the inaugural episode of Wise Beyond Bitcoin Macro Outlook, our formal background pre-crypto is actually in economics and finance. And our passion has been in monetary theory and history long before we got into crypto and blockchain. So we love to be able to bring that understanding or perspective to the space, and it really gives us an added level of excitement over a lot of the projects and development as alternatives. We love sharing this information. We've made a commitment to be a little bit more organized. So just like Ryan has this macro outlook series going, we also have a series going for secret updates, and there's a how-to series like the Kepler, how to stake, how to buy secret and IBC, Web 3.0 cryptos, as well as how to provide liquidity. So if you like the technical walkthroughs, you know what to do: subscribe, notification bell, give us some love, drop a comment. And we cover not just secret, we cover other projects in the IBC and the EVM. Just did a video about the launch of Pulse Chain coming out and the opportunities there. So if there is an opportunity and there is a protocol that looks like and is going to help promote that financial liberty that people seek in this space as they support these new projects that are building the future, then give us some love and we will try to share that love back. That being said, I'm excited about this organized manner. That doesn't mean once a week. It could be 2 or 3 times a week. So set your alerts, because when there's some information popping, especially if the Fed speaks, you know, Ryan's going to be all over that. Like, like the shadow for the shadow bank called Ryan the shadow bank.
The Fed shadow, right? Maybe that we should call this series the Fed shadow, right? No.
Hilarious.
Well, so why are we talking about macro issues today? Right. Well, there's been some news. Chairman Powell was in front of the Senate having a confirmation hearing, and he was being grilled. And in that, through that grilling, some choice tidbits about where we might think things are heading came out regarding monetary policy, rate hikes, and that sort of thing. And the market loves certainty because we've been through like a 4 or 5 day kind of choppy sell-off in the markets. And when Chairman Powell spoke today, there was a nice rally. You can see it across most indexes. You see it in the crypto markets too. And I'll go over to our favorite crypto website for tracking prices, and you can see on Nomics that it's generally a green day. And so these things are correlated, like we always talk about. It's not random that we're seeing the price action turn green. And what's it connected to? Well, we got some certainty about the rate hikes, what we're expecting, and when they might start. And so let's jump right into that. We'll have this below, and we'll have a link to this so you can read it on your own. But essentially, what we learned is that the asset purchases, the monthly asset purchases will wind down in March. So we have at least February, another round of purchases by the Fed in February, and I'm believing that's part of what's driving the kind of the bullish sentiment in the markets today, is that we can at least say, okay, well, February, we're going to enjoy the stimulus through February, right? So the party continues, essentially, is the takeaway from that. And moving on, Powell was asked whether or not he was going to be prioritizing inflation over employment, because there's really what's called the dual mandate that you have, that the Fed has. And what that means is that they are supposed to be looking at two different metrics. One is inflation and the other is employment. And they want to target maximum employment, or what they call full employment. And they want to target a steady rate of inflation somewhere between 2 to 3%. And so the question is, well, inflation's out of hand, right? And are we going to be more concerned? The fear is that they're going to be more concerned about inflation than they are employment, and that will lead to like an overcorrection, right? Where you see the rates hike, and then the Fed selling off its, reducing its balance sheet maybe faster than expected, and then this would potentially lead to unemployment, right? Because it's like it's a bit of a trade-off. When you fight inflation, you run the risk of having unemployment creep in, and to the extent you're concerned about maximizing full employment, then inflation becomes a problem. So it's a bit of a balancing act, and he made it clear that he's not going to prioritize one over the other, that they're going to be concerned about both.
It's like when you say that balance between inflation and employment, the idea is that if they quit printing money, if they dry the spigot that's being used right now to fund a lot of commerce, then a lot of commerce slows down. Right.
And then demand for labor falls, and then maybe unemployment goes up. Right. All right, moving on. This is something that I knew we were going to have to jump on and talk about. So there's also a statement about a soon to be report about digital currencies and what's going to be, what are we going to do about them, right? And this is something that we've been talking a lot about. And the word is, the report is going to be more about asking questions and seeking input from the public than about making some kind of firm recommendations about policy. And I really love that, because this is something that we've been concerned about, is that we have the potential for people in positions of power to start crafting policies about products or markets or ecosystems or institutions or whatever they don't fully understand. And how it is when you start tinkering with complex things you don't fully understand, the chance for unintended consequences and chaos is high. So to see them going about this carefully and with a fact-finding perspective, and not somebody who believes they have all the answers already, that gives you a little bit of confidence. I mean, it's the Fed, so take that with a grain of salt. But it's better than them coming out and saying, "Oh, we got it all figured out, and we're going to tell you how it's going to be." Right.
I like that response, but it also shows intellectual maturity. It's for senators, for politicians to ask Powell to say, what public policies, most people don't even understand how blockchain and crypto works within the whole sphere. There's never even been discussions in front of the public at a presidential debate, or at those community town halls, in your local community. Has not been a lot of discussion. Most people don't understand blockchain or crypto or where those risks are. So to all of a sudden ask someone in a position of authority who's in the middle right now with a lot on his plate, managing the American economy and what's going on with what they're having to do with rates and inflation and all the stuff going on right now
during a pandemic,
all the stuff going on right now, and to say what policies should we mandate on this new technology that we don't even understand. That's brilliant, to say, well, let's talk to the public first. And I'll say, well, why else? We've talked about Panama Papers. We've got a video on it. We've talked about the Pandora Papers. We've done a video on it. And there's a lot of news. There's just not about us doing a video. I mean, it's very widely known that the modern financial system is rife with corruption or fraud or laundering, so much on the scale that the laundering that's done in the traditional financial system is larger than the whole market cap of crypto right now.
Right.
Like the whole market cap, like all of the cryptos put together are actually smaller than the actual laundered fraud going on. And
that's just what we know about, right? That's just what's confirmed. Who knows about what we don't know?
So the idea that we need to like devote political and financial and resources to taxing and regulating and figure, it's like, let's not try to get blood out of a turnip, folks. And to take it even further, he's going back to the public, being around the public and hearing from the public and experiencing as an educator working in crypto and blockchain. I know, and I'm going to do a channel to help someone actually who just got scammed and hacked in the secret community.
Saw that.
But the idea is that right now you've got the SEC, you've got FDIC, you've got these institutions that are there to protect people from losses and from fraud. Well, there's been talk about taxation without representation. There's literally been no support from any institution, from anyone there's been not one financial or oversight or media. There were people that knew BitConnect was all the people I knew. I mean, a lot of people are like, BitConnect's not crypto. A lot of us who are in crypto knew. If you were a veteran, you knew that's not crypto. There's a trading bot where you have to give someone your Bitcoin and then you have to. So,
and there's been numerous examples of scams and frauds and things like that the community has discovered, patched, fixed, made the people attempted to make the people whole in some level, right? Gone after the people, try to get their money, claw back some of the money. But the point is, where has the government been? And if they want to have, if they're coming to us saying, hey, give us the keys to the kingdom so we can control this for you. Well, why? What have you done for me? You know, we're showing you that we're better at this than you guys are. So until you can match our performance, I'd say, no, we're good. Thank you. But we're good.
Because we're all men and women in this world, and we're all trying to sort of function and help each other out. And if you're working in those positions, the idea is that you're helping us out by monitoring the corruption, the fraud and stuff that goes on in that system that you created. This is a completely different thing. And to try to fit it into your jargon and word,
it doesn't work.
It really makes what this is. I think it's funny when people try to use modern commercial financial terms to say, so are you getting dividends and rewards? It's like, well, no, you're staking and you're supporting a network, which is required for.
And don't make me use your language that describing it.
It's a completely different language. And so it's important to understand that. And a lot of people have taken a lot of losses that they will never get back. And there's a risk that the early adopters, it's like people flying airplanes that took a risk building airplanes to figure out how to make it with flaps, with the tail, how to do these different things. And they crashed and burned and spent a lot of money. And then in retrospect, someone wants to come along and says, well, we regulate travel right now. And so, I'm not gonna go down that road, but okay.
Well, let's wrap up with this. There's one more point we should probably hit on here that kind of explains why people reacted so bullish to this meeting. What are they pulling out of this that makes them so optimistic to why the markets are rallying the way they are? And I think this final paragraph kind of hits on it. Right here, Powell was asked what were they planning to do regarding the balance sheet, selling the assets that the Fed has been buying all these months. And he made it clear that it could take multiple Fed meetings to decide on the next steps for shrinking the balance sheet, which means that the plan's not formed yet, and it's probably not going to happen very quickly. This is probably going to be a prolonged thing. And if we remember back in 18 and 17, when this began, it also was something that they telegraphed for a long time, and it drug out it took a year, or I believe a year or two for them to even get halfway down the plan before they, of course, we reverted because of political pressure and we went back to stimulus. But regardless, the point is that this is not going to happen in one meeting or in one quarter. It's going to be something that happens probably over a year or two. And then that's something that people like to hear. It's another reassurance that, hey, you know, the Fed's not going to do a Volcker move. We're not going to see double-digit interest rates, you know, overnight. We realize that inflation's a problem, but he wants to prioritize employment and full employment, macro stability as well. So it seems like a very tepid kind of response to this inflation problem, and not something that's going to be an emergency response where you can just assume that all financial assets are going to be sold off, you know, immediately or anything like that. So that kind of wraps up what the macro story is. There's more to read about, you know, more details from other analysts and you know, financial news editors and journalists. They have their own little take on what other details are being discussed, but that was the main point about the Fed and what the takeaway is regarding what 2022 is going to look like.
Well, that's awesome. That's an awesome article, awesome update, and it makes sense how the market's responding to that news. I would like to add to this, and we've kind of talked about this before the video, so get your feedback on this. But due to a lot of ignorance of the size of the cryptocurrency market cap and whether or not it's you know, it's a stumbling block or it's, you know, a support to the economy. I think that it's quite possible that Powell sees that crypto and blockchain in many ways allowed to flourish is really beneficial to the US dollar and to the American economy, because it's first of all, the stable coin. We look at the stable coin market and how it's at close to 180 billion, I think right now, and it's growing obviously, but denominated in US dollars. Dollars are the most sought after
and collateralized.
And collateralizing different reserve currencies and different DeFi protocols. So, and like you said, absolutely, a lot of these stable coins, in order to get the assurance of the people that they're actually having to collateralize with commercial bonds. We've done, you know,
and so that locks up those assets and creates a price floor for them, and essentially, because they're not being sold, and that supports the dollar-based financial system, right? It gives a use case, and it creates a demand for those assets.
And there's a demand for the dollar, because as the demand for the dollar in the digital space grows, you've got a demand to pull it off. So this is really, you know, really, as hopefully no matter what side of the political spectrum you're on, left or right, this is something that can benefit people in all over, regardless. I mean, this is something, especially when you look at so many jobs being shut down due to whatever reasons, pandemics and things that are regulations for health and stuff to keep people home, or a lot of people just staying home. A lot of people are working from home. And you look at cryptocurrency and the opportunities that are afforded growing this ecosystem with coding. So a more patient, at least patient, to allow it to develop so these conversations can happen in a more laissez-faire approach in the beginning, so that people can come with an educated mind when deciding what to do to protect each other from the.
I would almost go so far as to say we need like a special economic zone, and not so much regional, but more like, okay, you're playing in the crypto sphere. That's considered to be the special economic zone. We won't apply the same rules we would apply to the mainstream markets. We will to this, because this is different. And so the question is, well, why should we protect it? Why should we create this island of exception where this field exists? And I would point to Shanghai and Shenzhen and various other SECZs, special economic zones, in China, and Hong Kong is another one. And look at the differential in living standards and incomes. When you free up spaces and let innovation happen, miracles follow. So
I'll tell you another reason to say,
go ahead.
By allowing it, understanding how these opportunities work, like Bitcoin needs computer miners and computer chips, so that by allowing that to be protected, you're actually, this is still a baby market, still emerging. I mean, 180 billion is not big when it comes to the world. So when you look at this young emerging market, by allowing it to be protected, you're actually allowing it to reinvest
Sure.
in the resources necessary to grow. Because right now, these resources that we talk about, that we love, if everybody in the world tomorrow would wake up and be like, you know what, I'm going to get a crypto wallet today, and it wouldn't work. Everything would just be like, whoa, transactions. Yeah. We don't have the capacity for this. It's slowing down.
It needs to be built.
It's an organic, needs to be built. Like a sapling doesn't bear fruit.
And it employs a lot of people and a lot of resources.
Right.
I think that's what you're going, is that we often think about just the negatives. Okay, well, it's taking investment from that would go to purely dollar denominated assets in the normal system, right? And that means that X, Y, and Z. So there's these negatives, and maybe that means jobs are there's layoffs, or maybe there's some kind of real reallocation that happens. But the positive is that, yeah, but there's this whole industry that's growing, that's hiring and expanding, and people are getting jobs there. So it's kind of like almost like the Luddite thing with the looms. It's easy to get caught up on the first step, the first step in the analysis, and not see all the demand for labor and resources that comes from that ecosystem or that industry. And when it grows, we all benefit, right?
Absolutely, brother. That's it.
Was that a good stopping point? Do we hit all the right notes?
I think we hit all the right notes. And right now, that is good news for crypto, good news for the markets in general. And even his sentiments were because of how well it looks, the economy is responding and recovering. He kind of used those words. I don't know exactly if you scroll down the article, but he said something to the effect of, due to the fact that things are going well,
right
towards the bottom. Yeah, it was at the very, very
kind of towards
reassured. Yeah, scroll up. Yeah, there it is.
There we go.
Reassured investors, jump down as the continues its rebound.
It was more or less a calming. He struck a calming tone for sure.
There you go. As it continues its rebound. When you say continues its rebound in Fed speak, that's signaling that things have rebounded.
Right.
They're not falling. Yep. You're not saying that things are falling. You're saying that they're continuing to rebound, which means and I think and that's kind of where they've been rebounding, and that process of rebounding is
continuing. And that's a nice often rosy way to put the spin on the inflation problem, right? Because that's the two sides of that coin, is that a rebounding economy is also one where prices tend to rise, right? And so you're seeing that they want to stop they want the rebound to slow down, but they don't want to kill it, right? So it's all about managing that and I feel like part of it is we've been stimulating the economy so hard for so long, last 2 years, that whenever we got a vaccine, whenever things kind of opened back up, that pent up demand was unleashed. I think that kind of took some of these policymakers by surprise. They didn't. When people went out and bought, and so we had a supply chain crunch, but we also had aggregate demand increase, right? So it's like two forces that are both heading down, creating that snowball effect in the same direction. And definitely rosy to say it's a rebound. That's true, but I feel like the rebound is almost, it's like that's kind of the problem, is that it's rebounding so hard that we've popped up into a boom. And but we'll see how the Fed manages it. People have confidence in their toolkit, so we'll see. But today's a good day, and we're happy to see. We're happy to see the markets in the green. We're happy to see that the interest rate hikes are going to be put off till March, and that we have another month of asset purchases. Markets should like that. So we'll keep you up to date on all things macro, all things Federal Reserve. And like, comment, subscribe, tell us where we got it wrong, tell us where we got it right. Anything, any hints or criticisms are always valued. And I think that should wrap it up, right?
Yeah, that does it. Until the next time, have a beautiful day, and namaste, y'all.